Hello, personal finance students. I put an interesting information about taxes and ask ChatGPT. You all have to file taxes soon, and you can always go and ask ChatGPT, a question and see how much your taxes are going to be before you go to your accountant, or it gives you a general idea. Even if you file your taxes, it's a great idea to go and ask ChatGPT. I put an example. Here it is. Hello, ChatGPT. My name is Jane Doe. I live in West Virginia. An accountant will file my taxes. However, can you help me? For example, I make $50,000 and I have, suppose, a 5-year-old son who lives with me, and I use standard deductions. However, I have done a smart thing and I have put $7,000 to my traditional IRA, not the Roth IRA, traditional. Let's see what ChatGPT has to say. Says, okay, I live in West Virginia. I am single. I have a dependent, and I use a standard deduction, $7,000 of traditional IRA. This reduces taxable income. That means that Roth IRA doesn't reduce, but traditional reduces. Estimating tax for 2024 is very similar to 2025, and I am an employee that gets W-2 form from my employer. See how nice it works. Here is my salary. Then I get, first of all, I get $7,000 discount. When I say discount, I mean the IRS doesn't say I make $50,000. It says this poor person only make 43,000 because he has put money for his retirement or her retirement. Let's be nice to him or her and get taxes on 43,000. Then it gives me a standard deduction. Standard deduction is another discount that I get. Means that from this $43,000, again, 14,600 will be reduced, and I only pay taxes on 28,000. Do you see how nicely this IRA contribution reduced my salary? 401k does it the same way. It reduces, but your employer reduces it rather than you usually. Therefore, it's always good to contribute to retirement account. Many of you like Roth IRA, which is great. Some of you want to get some money taxes upfront back. Put it in traditional IRA. That way, you pay less taxes to the IRS. Let's not forget, if yes, the taxes on $7,000, you know how much that is. Let's think about it, $1,000 suppose. Why do you want to give that $1,000 to the IRS while you can keep it in your check, in your retirement, and every year make money until 20, 30 years from now? And imagine if every year you put this 7,000. Anyhow, we come here. This is what the IRS looks at. They call it taxable income. This is the taxable income. This is the gross income. You had two deductions, one in here and one is standard deduction. And this is, and also when then you come here. And what happens is that if you only had $11,600, you would only have paid how much? 1,000. That means only the first 10%, the first 11,000 of this means out of 28,000, $11,600 of it will get a 10% tax for IRS. That is what IRS wants for 11,000. The remaining of 11,000, the remaining money, that means you deduct 11,000 from this, 16,000 remains. Then IRS charges you a little bit more percentage than 10% on that 16,800, and this is what the taxes for this amount is. If you add this amount and this amount, that becomes 28,000 here. Therefore, IRS adds these two numbers, and that is your taxes for this year. However, you have a 5-year-old son. The IRS is very nice to you. And what it tells you is that out of 3,000, it says it is going to give you $2,000 of tax credit. Let's not forget this $2,000 tax credit is very good. You know why? Because rather than paying 3,000, you only pay 1,000 because that child helped you with 2,000. Let's not forget that before that traditional IRA, this $7,000 only helped you with $1,000 of taxes, because it was reduced from your $50,000. But this $2,000, the importance of it is that it is not reducing your 50,000 by $2,000. It's very important concept. It reduces your taxes of 3,000 by 2,000. Do you see the impact of it is significant? That means one child will give you $2,000. That means from 3,000, it gives you a break for 2,000. Okay, then we come here, and this is the only the amount you pay to the IRS, and that is the IRS. Social Security is what, you had, they automatically deduct from. This is not for the IRS. That's not income tax. That's what you pay for your Social Security. The more, make, the more you pay for your Social Security, and hopefully when you retire, you get a bigger check. Therefore, that's what you have from in 1 year. Out of that 50,000, this much of it goes for Social Security, this much of it goes for taxes, and this much, FICA. Then we come here, and then we see West Virginia looks at it and says, you made $43,000. Do you see? It is giving you a break for that IRA that you put the money, because 20 years ago when you sell your traditional IRA, then West Virginia comes says, hey, we were nice to you. We let you keep our taxes, and now you have to pay our taxes on that 7,000. However, on this $43,000, West Virginia wants its taxes. How much does it charge? Let's say 5% or 4%. It's almost $2,000. You pay out of this 40,000, the 43, to the state of West Virginia. Here it is summarized. Federal tax, 1,000 something, state, Social Security, state tax, and this, and total taxes withheld. That means your employer keeps $7,000, and rest of it has come to you in every 2 weeks and something. That means if you look at it at 7,000, then the rest of it is around 3,000, and that's the money that you got every month, divided between 12 months, or you got biweekly, or every 2 weeks, and then you come here. And if you want, I can show you your home pay and those things. And I didn't say, yeah. I said, okay. And as you see, federal Social Security taxes, Medicare, and then total taxes that you will be paying. Let's not forget, this is not what you pay for income tax. It is for Social Security taxes, state taxes, and all of this. And your take home is $43,000. That's where it came. It was 50. This went to, your traditional, and this is, this is what you get every month. Therefore, I strongly recommend that you go and learn on your own, then try to figure out what happened and how much you are going to get back. If you are expecting some money back, the IRS is going to give you money back. And my recommendation, go and do some of these calculations. And if you want, you can post something. But my recommendation, if you don't want the people know about your personal issues, you can go and make it up. Or if you want, you can put, don't put your, Social Security. And I don't recommend. Make it up for someone else, Post it on the discussion board, and say, hello, I have a brother, my brother, or some, something, a story. I made this as a story because I am not a Jane Doe. I am, John Doe. Therefore, it's just a making up. That way you get some ideas. Feel free to go. I created a discussion board at the bottom of this week. This discussion board is not gradable. It's just for us to take a look at it. And if you don't post on it, that's fine. If you want to post, I will post this information in case you want to become familiar with the issue of taxes, which are very important concepts, and there are tax laws keep changing, and there are good news coming in for elderlies. The elderlies are going to have another break. I think those people who are over 65, first they get additional deduction. I think it's around 2,000. Therefore, they will be able to deduct 16,600. Then on top of that, there is I know that the government had a new policy, which is Donald Trump called it BBB, Big Beautiful Bill, to give to elderlies to file their taxes additional $6,000 of on top of this deductions. Therefore, these are the things you have to be familiar. If you do not know, you will lose money in some ways. The more you know, the better it is. We were filing taxes here at the college this year, and there is a program called VITA. VITA means volunteer income tax. And the people come to the college, we help them, it's with the coordination with the IRS. And the state of West Virginia was giving money back to the people who had paid taxes on their cars on time. Some people had that documentation. They could get a break, a tax deduction. But some people didn't know about that policy. They didn't know, they didn't bring anything with them. There is nothing we could do at the last moment. Therefore, they didn't get any break from the IRS, from the state of West Virginia. It is always good to understand taxes, to know what they are, what these deductions are. And because at the end, you can save a lot of money if you know how things work, and you don't miss things. Therefore, this is something I want you, if you want, you can go and make some examples and put it on the discussion board. As I said, if you don't just post anything, you won't lose any points. It's just for us to learn from this very important concept. Smart people know a lot about taxes, how their taxes are, and what they can do to pay less taxes. What are the benefits of and the more you know about the taxes, these tax brackets are very important. And therefore, it's right after this 12%, then suddenly it jumps to 22%, as long as, we talked about tax bracket at some point. I want you to know about this.